Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmins brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real Grit. Let's get to it.
Everybody, welcome to Real Grit. I've got Patrick Grimes here with me. He's the founder and CEO at Invest on Main Street. It's a private equity firm with a mission to enhance busy professionals' quality life by providing tax-shielded and inflation hedge passive income with wealth building investments. He's raised over $20 million from his network of passive investors to accumulate over $200 million portfolio that consists of over 2,700 units in multifamily across the emerging markets around Texas and southeastern US. And he's an author. He's co-authored the Amazon #1 bestselling book, which we're going to get into today. It's Persistence, Pivots, and Game Changers. So I'm excited to have him here. Patrick, how are you?
I'm great, Neil, and thanks for having me on. I love your show. And the grit really rings true with me because I've felt that in numerous occasions.
Well, you've got a diverse background in terms of where you started and how you made it through and how you got to here and where we're at in our conversation. So talk to me, what was your first entry point into real estate?
Well, let's see. So I was educated as an engineer, mechanical engineering, and I started at a machine design firm right out of college. And the owner of that firm said, hey, while this engineering stuff is great, you need to put your money in real estate as much as you can, as early as you can. And while this engineering is cognitively rewarding, it's volatile and you're going to have a tough time. So my entry was to immediately start investing into these, what I thought were very good investments at the time. And it was pre-development and building on land, that kind of stuff. And unfortunately, that was 2007 when everybody thought the market was going to go up forever. It did fall. And, I rode that out and barely avoided BK, negotiated my way through the loans, and I took a hit both financially. They came after me because I was personally guaranteeing everything for income tax, even on loan forgiveness. So it took several years before I came crawling out of that one. But I still was an engineer at the time. So I just kind of dove into that and that was going to set me free. Right.
Right. The traditional path, right?
Yeah.
Yeah,
exactly.
All right. So you made it through the crisis. How many, give me a sense of it. How many properties or dollars and cents? What was that like? How many were you dealing with at that time?
Well, I don't go too much into my personal finances, I guess. Probably, it's just sort of a private thing for me, but I was underwriting in a single family since, a handful of deals every day. And my partners were coming up with constant opportunities. And I had a whole team built out. And I was out of California. I was actually doing those in Texas.
We'll classify it as a substantial amount. I just wanted to sense if it was 3 properties or there was a whole business built around this. Totally understand. So you end up going down this traditional path. It's going to set you free. And where did that lead you? And what did that look like? What did your journey look like there?
Well, so after, I said, oh, well, you know what? Real estate isn't all it's cracked up to be. I dove into, because I was in manufacturing, automation, and robotics. I did 2 master's degrees, one in business administration and one in engineering. And, working full time, doing a master's degree, I'm a little bit of a glutton for punishment. Doesn't really set me apart in my family. I've got a father with 3 PhDs, a little sister with a PhD, and she's a tenure track professor that runs a clinic as well. So, I'm just barely keeping up. But, I started putting my hope into company stock, bonus plans, and worked my way up to a directorship and progressed through 3 different companies. And I think that's when things came to a head because I started feeling like I was about to make it. And, there were some opportunities where one specific one, I was actually in a car on the way up to Mammoth. My brothers, all year long, we text on a text thread called Mammoth Brothers for a ski trip that we go on. And I got a call, which actually kind of was a pivotal moment because it devastated project we've been working on for like 5 months that was supposed to give us hundreds of thousands of dollars in passive income on the engineering side, virtually passive. And I realized that was once again, somebody that walked in, said all the wrong things. The owner's son scared everybody. The contracts were signed, but then they backed out. And that was when, I haven't found it yet. I've got to figure out how to take control of my own finances, and kind of started over at that point, because I knew that the high-tech space was fun sometimes, but it wasn't a real plan. It was a work until you die plan.
Yeah. What year was that?
So that was that like 8 years ago now?
Okay.
Something like that. Yeah.
Yeah.
Mm-hmm.
Yeah. So you have this, you're going to Mammoth, and you have this epiphany, if you will. And so where did that lead you? It's time to take control. How did you end up taking control?
Yeah. So I knew I was pulling pretty good bonuses at the time. So I needed some place to invest. And when I said, look, I want to take charge of it, and I knew that speculating on new construction and land and hoping that the market stays stable wasn't the right answer. So shifting to buying things that are already existing, but measurably below comparable. So it's a very easy business case, very simple engineering problem to solve.
Right.
And then calculating the cost to get it there. And so I started doing that in single family, buying, renovating, and holding. I didn't know at the time that was the Burr method, right? But then it very quickly became apparent, especially after I met my wife, that I couldn't moonlight single family. It was taking a long time to build a portfolio, and I needed to stop in order to be able to spend and have that work out. So took a step back, recalculated, did a bunch of courses, learned a lot of different strategies, and actually settled on scaling into multifamily apartment communities, because I knew I could work with team members. I don't have to do it all myself. I could work with people with decades of experience. I could scale into larger apartment buildings. The math and the calculus was about the same, just slightly different. And it was a more sophisticated business, where in a legitimate private equity firm versus elbow grease in it and trying to do it all yourself, right? With on-site. So there's a lot of reasons for it. And so I spent 2.5 years actually kind of going residential to commercial, pivoting and learning before I ever got in my first deal.
Wow. What was the biggest challenge making that transition?
So in single family, you got all the control, right? And it's all your own money. So, and you can get into it fast. You can immediately, we'll try this one. We'll try that one, because not one of those will take you down, right?
Right.
And with larger private equity firms, you've got to establish yourself to become a private equity firm with lenders and with more sophisticated partners, property management firms that are corporations, not mom and pop property management firms. But you've got to learn an entire space. You've got to start developing relationships with brokers that are kind of like an old boys club to just start getting deal flow, learn how to underwrite, and bring on the right kind of trusted partners, because nobody can do it all on their own on the commercial side. And then perhaps aside from the letting some control go to people that have been doing it for decades longer than me, aside from that, it was learning to spend other people's money, right? To bring on investors and scale in that way.
Yeah. So you ended up identifying your first deal in the multifamily world. What city or what state was that out of?
The first one was in North Carolina. It was called North Augusta, or South Carolina, and it was in North Augusta.
Okay. So you decided to go into multifamily. Tell me about the first property you bought in the multifamily.
Yeah. So there was a couple close calls, right? Where we got into deals that what they were, we got them under contract, went and did due diligence and pulled out. But when we finally found one that made a lot of sense, owner who had owned it for a long time, not renovated any of the units, it was in South Carolina, North Augusta. So kind of Georgia, but across the river actually in South Carolina. And actually right across the river from where the Masters tournament was.
Oh yeah. Okay. Yeah.
Not a bad area.
No.
And one of the partners I'd been working with, I'd been sending my deal analysis and underwritings to on a regular basis. He said, you know what, this is a great one. Let's work on this together. So got in there, did just about every job I could between the due diligence, underwriting the deck, the getting it across the finish line. It was a lot of work, but if I subtract kind of the 2.5 years leading up to this kind of new education, it was about as much effort, that one deal, as about 1.5 single families, but it was 86 units.
Wow. You got a multiplier effect there.
Exactly. And then once we got that, then the second deal was right on the tail end where it was, okay, we just got this one over the finish line. We got another one in a deal and came up in Dallas, which is an amazing market and a great area. We had other assets in the space by my partners had that were doing well. So I flew out there, did the elbow grease and the due diligence, got everything. We were pushing that almost near the finish line. Another great opportunity. It's actually blowing away projections right now because it just had been mismanaged and unrenovated. And I get excited when I get into a place that I know I can improve and make the tenant's life better, safer, and healthier, right? And Absolutely. So to me, that really energizes me. And then on that third deal, the second deal, there's actually a third deal in parallel. And I've heard some people call like the law of the first deal, but found another deal because the broker was just like, hey, I have another one, pocket listing. You guys are really showing up and doing well. So we kind of did that in secret. I was living on Oahu and Hawaii at the time, and I did a red eye overnight skeleton crew. We didn't want to tell people and distract them from the other deal we were working on. So, but when we came out of it, we're like, holy crap, this is a great deal. Pencils, we've got a good offer. Then let's do that. So it's definitely some, I'd call it 2.5 years in the trenches, putting in offers, traveling, investing. Basically taking on what I called my wife my third master's degree because I was learning all the time,
right?
Tons of courses. But then once things, I found the right found a lot of the wrong partners, found a lot of the wrong deals. But when things finally lined up and we were on the same page, it took off. And so it was really a testament to the scale and power of multifamily versus the slogging along of the single family world.
Incredible momentum from 1 to 2 to 3. They just fell like dominoes, didn't they?
Yeah, exactly. It was when I was in it, I was like, wow, everything's finally lining up. And it was that third deal where I said, hey, there's a system now that we have in place and it's working. And that's when being a systems guy, master's in engineering and undergraduate engineering, I started saying, you know what? I don't want to chase any of these flashy objects, right? I had been underwriting retail but this multifamily down the fairway improvement space where you buy under market and bring it to rents, just like bring it to market rents,
That's
just
right.
like I was in a single family. If I just rinse and repeat and stick to that, then my investors are going to win, right? Everybody's going to win and we're all going to go home, not double our money tomorrow like we were trying to do on new construction, right? And maybe lose it all along the way.
Correct.
But we're going to be that tortoise, low leverage, big shell, a lot of fortification, but we're still going to win the race.
And today you're at over 2,700 units. So bring me current. That's where you're at now. Where are you guys headed? What's in the pipeline for you guys?
Yeah, so we've been doing some really great opportunities very sporadically, specifically through the Southeast and Texas. As of last week, that has actually grown to 3,100 units.
Congratulations.
Thank you. And this last closing was a true testament to the strategy because we bought a property in Florida at 27 million. We improved it and then we sold it at 37 million. And our investors said, wow, that's amazing. Because it was in less than a year's time. Typically, they're a little longer, But this one we just got it from off-market deal, way under market, unrenovated. Place needed really easy improvements right in our model. So we went ahead and sold it by the popular demand of our investors at the offers we were getting. We exchanged, only 3 of the investors pulled out, right? We had another 30 that stayed. We exchanged all of their funds into a 372 unit in Houston. So they traded up their basis. Now they're cash flowing at almost a 2x multiple than they were before. And we're driving the value of the next deal. And it was really cool to see that momentum and that trust. And so what we're doing now is we're working it's a lot of kind of the rinse and repeat, but I'm starting to get my name out there a little more. I mean, being the engineer, I'm kind of head to the grinding stone and getting stuff done, but I started doing podcasts this year, and Neil, and I appreciate you having me on. I've got a book out. I've been writing for Forbes a lot. I got about a half dozen articles on Forbes. I'm just covering some of the bigger topics of, I've had 1,000 investor calls. What do they all want to know, right? Trying to get that story out there that I did, trying to do the risky development.
Right.
Didn't work for me. And then trying to do single family flipper I was holding, but flipping like you see on the TV, right?
Right. Yeah.
But then at the end of the day, if you trust in somebody that has experience and you partner with somebody, then you can go enjoy your life and family, friends, and hobbies. And somebody else can scale your investment portfolio, not just in stocks, but also in real estate, where it's tax shielded and inflation hedged. And I think that message of investing in commercial real estate, most people don't even realize that isn't available to them because it's not a traditional approach.
It's not traditional. And and you're right. I think they don't realize it. And then they don't, the next piece of that is they don't know how to even access the market. They don't know how to do that. So I guess from your standpoint, you work with investors in that regard. How do they connect with you? And maybe how do you help them through that process?
Yeah, well, so most investors, they set up a call with me. So if you go to investonmainstreet.com, you'll see a free strategy call, a discovery call. I meet with them. We talk about what they're doing, what their goals are, how they're invested. Most of them don't think they have the funds to invest, right? We'll help unlock that in some cases. Some cases, people are working until they die, but they don't realize they can put their home equity to work. They're working until they die, but they don't realize their IRA or 401k can be a piece of that can be put into a self-directed account to invest. Right. And some people are just all in the stock market or in their company stocks trying to make it big like I was and don't realize what that downside can do to them. So I'll help with them and just say, hey, look, here's potentially how you could choose to diversify into some of these commercial assets. And that's what this path looks like. I also I have a book, Persistence, Pivots, and Game Changers, Turning Challenges and Opportunities. And I wrote a chapter. I'm much better looking here with hair, but there's some other people in here, NFL, NBA coaches, Phil Collins, lead guitarist of Def Leppard.
Yeah.
Brian Tracy wrote the Ford. It's an amazing book. It tells a lot of great stories from a lot of great people. And if they mention your podcast when they set up that meeting, I'll ship them a free copy signed of this because I really do believe in its content.
Well, it's a number one bestseller on Amazon, is it not?
Yeah, it is.
I mean,
worst case, you end up with that, right?
Yeah, well, yeah. There you go. Set up a meeting, and Patrick will send you a signed copy of the book. I want to talk about the book, Persistence, Pivots, and Game Changers. All did the title resonate with you? And I guess talk to me a little about your life, where each of those have, your life has touched on all three of those.
Yeah, well, when I was actually at a real estate event. And I was talking to a number of people and they were sharing each other's stories. Sure. And one of them said, hey, look, I want to put together a book of people like you, people who made it out of the work until you die, made it out of corporate America, but they didn't do it automatically. They weren't born into it. Nobody said, hey, here's the light at the end of the tunnel. Right. I picked up lamps, every course I did, every investment strategy I tried, and they shared a little bit more and more about the passageways that you can take until I found through doing things the right way, maybe the wrong way, and each way a little bit better each time. And they wanted to have that story. So it resonated with me because persistence and pivots from trying things that busted in housing booms to angling my way into the high-tech world and realizing that's just going to cause me to work forever to doing things that worked in single family. But I realized that there was probably a better way where I wasn't giving up my family, friends, and hobbies to becoming a much more sophisticated and successful private equity firm in the commercial space. And it did take a lot of work. And I think that's why I resonated so well with the book. Yeah, no, that's really tremendous. I mean, real estate has been a complete game changer for you, has it not been? Absolutely. Absolutely. And then especially with what you're doing in there, it can be a game changer for those who invest in real estate, even indirectly, meaning passively. Yeah. And I think that's just it. Most people think real estate, they think of single family homes, but the reality is there are people that do it every day. And with single family homes, you're never going to be an expert. So why not put your trust in somebody that knows what they're doing, an expert? Yeah. Yeah. Let's do this. I want to move on to the final segment, what I call for impact. Your favorite quote: no battle was ever won according to plan, but no battle was ever won without one. Yeah, I love that because I tend to be that. It comes from the machine design robotic side too, because everything I did was a prototype. So you're always planning, you're always inventing, you're always trying to figure out and anticipate what's going to happen, but you never actually know. Same thing in real estate. when we're underwriting deals, we're analyzing, we're planning for things to go south. Like we have low break-even occupancies, we have reserves in the bank, we have insurance policies. So you plan for that to win the war. And it's not going to go exactly, but you have a chance to win the war if you do plan. And I think that's why it resonates with me so much.
Yeah, that's great. What do you think holds most investors back from hitting their personal next level?
Well, I think it's a combination of two things. I think one is people want to do it themselves. And for example, when I was living in Southern California, my wife and I, and when COVID hit, it was challenging, not only because of COVID and the quarantine, but also because we were on curfew because the demonstrations that were happening and there was constant fire. So there was a veil that set. My wife, the dreamer, had an idea, hey, let's move to Hawaii. And I wanted so desperately to make her dreams come true. But we were so busy, there's no way I could ever get us moved. That's just a ton of work. It's painful. My back's an act. There was just no way we could make a move. And it wasn't until I finally overcame I need to just trust in others that are professionals and do this move for us, risk them touching my private possessions, right?
Right.
And I made that call that 2.5 weeks later, we were in Hawaii watching the sunrise. It was hard to ever see that life could be different when I relied on others to do things. And I kind of got past that sense of trust. Yeah. But it's really easy to stay in the status quo and just continue life as it is. So I think the people that make that step and give it a shot, and it's fairly low risk to do it. These are great investments, but people that make that step, there's a big reward out there.
Outside of real estate, what are you most passionate about?
Well, I want to say my wife and my puppy. We have a great family and a kid on the way. And so we're really excited about that. Yeah, definitely.
Yeah, that's great. What's your favorite way to make an impact in the community?
So the number one way is investing back into our multifamily apartment communities.
Sure.
Now, we've done a lot of different things within the communities and with also feeding families in the areas of the communities. But when we go into some of these apartments, we in Houston, for example, we printed out a stack during due diligence of unanswered maintenance requests that was a ream of paper thick.
Wow.
And I think these people have been struggling for a long time. And that owner had a 19% bad debt. That means 19% of the tenants weren't paying their rent. So he lost his building, right? So I get really energized when I get in there and I'm like, you know what? I can make this life better for them. And so it's safer now. We've patched the fences. We've added gating. We've added locks and padlocks on the amenities. We've, surveillance. We've cleaned it up. We've we've revamped the pool, put in safer playgrounds, and we're slowly over the course of time renovating the units and getting rid of pest issues. And at the end of the day, people's lives are better. And that really energizes me.
No, that's tremendous. Give me the site again. For people who want to connect with you, they want to have a conversation to learn about the options to invest on an ongoing basis with you. How can they do that? Give me the site again. Yeah,
so it's invest on and then Main Street, all spelled out, investonmainstreet.com. You can also email me at patrick@investonmainstreet and we'll set up a meeting. But when you go to that website, there'll be a button to set up a free strategy session. It's no pressure. We don't have any coaching packages. We're just talking about things and we'll provide whatever value you're willing to share. We'll tell you, hey, this is what we can offer. And we'll also send you a copy of the book.
No, that's perfect. We'll make sure we get those links and then the website or the email address in the show notes here to be able to connect with you. I appreciate you taking the time to connect, Patrick. And we've got a wonderful story about how you win it going it alone by being a single family investor, literally doing it all and doing it in a challenging, risky part of the environment, which is tough to make it through. And you pivoted, which speaks to the book, right? You pivoted to find, and clearly you found your niche now exceeding 3,000 units. It's just tremendous. And you're serving investors and allowing them to tap into a proven plan and a strategy and somebody who's been there, done that. It's got a proven team in place.
Awesome. And I appreciate it, Neil. Thanks for having me on.
Yeah, I enjoyed the conversation. Hey, for everybody here at Real Grit, I'm Neil Timmins, reminding you that real estate requires real grit. See you next time. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together. I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate a profitable partnership. You can find it at www.legacyimpactpartners.com. I'll see you in the next episode.